the markets are dumping. Prices are going lower. Bitcoin making new lows after new all-time highs. What happened? We were supposed to go higher. That person on Twitter said that once we break out of this range and go and break new highs, we should go to the sky and to the moon. That prediction didn't play out. That just shows nobody knows shit in the markets. So who am I to tell you what to do? I'm just going to tell you what I'm doing and give you suggestions in how to play this market. Let's look at Ethereum. Ethereum holding well. Yes, we broke new highs, which is fantastic. New all-time highs. Absolutely glorious. But now what's happening? What's going on? What am I doing? Just to recap, I've been pounding the table on Ethereum ever since we got down to lows. You got to just buy here. If you want to make money, you buy now. And that was down here at 1,300. What do I need to do? I'm going to show you and prepare you for the next cycle. Welcome, everybody. This is the Financial Trader's Mindset, where I talk about the psychology of the markets, how to position yourself, and set yourself up for the best case scenarios. All right. We're looking at this market. You didn't want to buy the dip. Everything looked like zero. You just didn't buy. Ethereum makes new all-time highs. You FOMO'd in. Now what? So I'm going to show you what to do to prepare for the next cycle. Who am I? Why listen to me? The proof is right here. I provide liquidity, concentrated liquidity in these markets. And I've been doing it since 2021. I've generated over $300,000. I set up my pools to buy the dip, to be in the markets, providing that liquidity for the sheep that are getting slaughtered as they capitulate into my bids. Then I secure those assets, lend them out, borrow against it, leverage up at the lows, like I was doing down here, and I was telling everybody to buy. I ride the rocket up, make multi-six figures in gains. What have I been doing lately? Down here, I was pretty much all in. Now, about 40% cash.
$50,000 cash.
I sold some at 4,300 on Ethereum, more at 4,800. Raised some cash, now looking for the next opportunity. If the market wants to go higher, that's fine. I'm still positioned. That's how you avoid FOMO. Always being in the markets, having a core position, managing risk, paying and rewarding yourself when the markets go your way. Accumulating when everybody's fearful, just like Warren Buffett does. If he was in crypto, he'd probably kill it. So what am I doing now? All right. So what I'm doing is I've been raising some cash. If you look at my Solana portfolio here, been selling. I bought a lot of Solana, been farming liquidity pools in Solana since March 2024. Price has been sideways, but I've doubled my Solana portfolio with concentrated liquidity. I bought a lot of Solana down in the low hundreds, down to $90. When everybody was fearful, I was buying it up, leverage up. Now we're in nice profit. So I've been distributing my Solana. Same with Ethereum. See, you can pause the video, see the proof since August, buying the dip. If you want to pause it, there you go. That's what I've been doing. Now I got a lot of cash. Now I'm in the driver's seat. We can wait for good opportunities. But if they don't come, I'll ride the market up. That's fine too. How do you position in this market? What should you do? How are you going to put your money to work? If you didn't buy the top and you're looking to buy this dip and you're like, oh, okay, I think an opportunity is coming in the markets. Let's look at Bitcoin. Still breaking new lows. How low can it go? I don't know. But what this tells me is that here, this is the starting point now of this sequence, of this drawdown sequence. Every time we make new lows, it resets the clock. Had we made a higher high up here and had this low to base off of, I could be like, okay, there's a case here that maybe that could be the lows. But no, we made new lows. That shows weakness in the market, seasonality, the summer, not a lot of liquidity, not a lot of action, not a lot of volatility, drifting, waiting for the end of the year, volatility to kick back in. If we look at Ethereum, it hasn't made new lows since about a week ago. It's showing Ethereum is a little bit stronger than Bitcoin. Bitcoin has been in a crazy run for years, for multiple years. It deserves a little break. Let's check out the Bitcoin dominance chart. Bitcoin has been in this uptrend since 2023. We finally broke down out of this channel. But there's a caveat. I know a lot of people are saying altcoin season is coming, and they may be right, but I would be cautious in selling all your Bitcoin and rotating to altcoins simply because ever since we hit this top in June, we've been pretty much straight down. That's multiple weeks of straight down in dominance. If you just look back recently, what happened when that happened? Broke down, broke this low. It looked like it was breaking out. I thought we were going into alt season. Alts were pumping, everything looked good. And then nope, faked us out. Ripped right up, roared to new highs, and kept going for months. Sucking out liquidity from the markets. Bitcoin just sucking out the liquidity out of your favorite altcoins dumping. You're sitting there, oh shit, man, that wasn't it. But what about now? It's doing the same thing. And that's why I say there's a caveat here. At the very least, wait for a bounce and maybe a rejection, and then wait for it to roll back over to consider, okay, this could be alt season. But if this recovers, Bitcoin ain't done yet. And that would mean most likely new highs in Bitcoin. Let's look at Ethereum dominance. Ripping and roaring. This is what we like to see. Ethereum is strong as fuck. I'm loving it. Look at that. Beautiful. If Ethereum could just chill out around 4K and Bitcoin could rip to new highs, bringing Ethereum dominance down while Ethereum stays around 3,500 or 4K, I'd be cool with that. And we get another run in Ethereum. I'm thinking this cycle is going to be a leapfrog with Bitcoin, Ethereum, and Solana. The top three going to just take the baton while the others rest and lead the market. Everybody's thinking of alt season, but if you look around, a lot of retail are still sidelined. They got destroyed in 2022 with the Voyager, with the Celsius, with the FTX crash, with the Luna crash, right? That was the biggest one. Those people don't want to get back into the markets, into the crypto markets. Maybe they're not allowed to get back in the markets after they destroyed their life savings, right? Which is not funny. It's terrible. The retail FOMO isn't here. And I don't think alt season's coming right now. I'm about 40% in cash, looking to buy the dip. In Ethereum, I was leveraged long down here. I was pounding the table to buy Ethereum down here in the dumps, below 2K, day in, day out. I was telling everyone, you got to just fucking buy if you want to make money. Some people listened. I was buying from 3,500 all the way down here with liquidity pools. So not only did I buy the dip, I also earned some yield. Now we ripped higher. I was leveraged long and distributed at 4,300 and 4,800. Now 40% cash, looking for the next opportunity. I still have some Ethereum. So if we go higher, that's fine. If we go lower, I'll set up liquidity pools below 4K. You don't have to do exactly what I'm doing, but if you have the same kind of thought process, you could adjust it as far as your liquidity pool ranges. How wide should you set it? You don't want to go too tight, right? Say you go from 4K down to 3,500, you might generate a yield, but think about your risk. If you're buying all your Ethereum up here and the market dumps below 3,500 and you're not okay holding that Ethereum you bought in the liquidity pool down to lower prices, then you need to think about your ranges and readjust. Maybe reduce your position size or go wider in range or a combination of both. And how do you do that? Go to Metrix Finance. It's simulated all here. Set up your price ranges, figure out what your liquidity pools will be worth. For instance, 4K down to 2,000. Put 20K in a liquidity pool at this time. Put 20K, it's all 100% USDC. As price gets into your range, it starts converting into Ethereum. You take on no slippage. You have the best pricing in the market because you are the liquidity. You're not trading. If you go onto a DEX, you're going to lose to slippage, pay fees. Take 100K, for example. You want to buy 100K worth of Ethereum. Slippage on average is 0.3%. That's $300 gone to slippage. How long will it take to earn that yield to recover that slippage? How many days? Not only that, you also have to pay the fee in that specific fee tier. Say the fee tier is 0.05%. That's another $50. That's $350 already in the hole right at the get-go. You're already underwater. And then say you're earning for yield, how long will it take to recover that? Say you're earning 50% APR. It's going to take 2 to 3 days to recover. 2 to 3 days of yield. Every time you make a swap that large, and it doesn't have to be 100K, it could be 10K. It's the same scenario. $30 on 10K or $35 on 10K. You lost $35. It's going to take you 3 days to recover that. Now you see the problem with swapping on an open market? No, you use liquidity pools. You become the liquidity. Now you have no slippage. You buy at the price you want. You have the ultimate pricing because you are the liquidity. Not only that, but you earn yield. What's not to love? You get paid to buy the dip. And as the market dips into your liquidity, you're generating yields. And then you can determine how will my liquidity pool work? Look, when we get down to 3K, the value will be 18,800. So I'll lose about $1,200 in value from 4K down to 3K. All right. You're like, okay, I'm cool with that. How much of the token will I own at 3K? About 2.57 ETH, 2.6 ETH you'll have. Now say you look at this, and if you're okay with it, you'll stake it. But if you don't like it, if you're like, it's too aggressive in the buying, I'll have too much Ethereum at that price, then you get less aggressive, drop the lower range a little bit. Now how does it look at 3K? About 1.5 ETH you'll own down there. Okay, how does the value look? At 19,320, you lose about $700 instead of 1,200. It's less risky. You see that nowhere in there am I like, oh yeah, you got to look at your APR and yield and see if you're generating some good yield. No, trust me, the yields will come. Most importantly, Are you getting the best pricing? And managing your risk. If you wanted to be super aggressive, 3,500 to 4K, and we get down to 3K, what's the value of liquidity pool then? Lose about $4,000 from 4K down to 3K. Now, do you see the primary reason of controlling your risk? Got to control your risk in this market. That yield doesn't mean anything. That extra 30% in yield, that's not going to overcome 4K of loss on a drawdown. It won't. Then you distraught, probably capitulate at the lows and hate life. Why do you think I've generated so much yield and so many profits just doing this day in, day out, 365, 24/7, showcasing everybody? That's why I show everybody. I don't have to do this shit. But I do it because there's an opportunity for everyone to take part in. You can easily learn this. And nowhere in there am I saying you got to time the market. You don't have to draw like trend lines or Fibonacci's or figure out where the price is and trade it, right? You don't have to trade. That's the beauty of it. You just find zones where you want to provide liquidity on the downside and the upside, and then you deal with inventory control. How much do you own? How much more do you want to own? How much do you want to sell? Where do you want to sell? That determines your ranges. Then you fine tune it using Metrix Finance. So control your risk. First and foremost, don't worry about the yields. They will come. Generating 533% APR since 2021. If you have some liquidity on the sidelines, some stable coins, and you're looking to buy the dip, that's how I would approach the market. Hopefully that helps. If you want to learn more, jump in my Discord. I talk about concentrated liquidity. I can help with your questions. If you want to try Metrix Finance, there's a 14-day free trial. Link in my description below. Go ahead and click it. But you don't even need to pay for it. You can use the free version. Use it at its core to figure out what ranges to set. All right, so let's not be sheep to the slaughter. Let's not let the market take advantage of us. Let's stop FOMOing at the top, capitulating at the lows, and wondering why we can't make money. Keep it simple. Positioning. Where do you want to position? Follow your plan. Execute that plan. I'm not in here day in, day out, managing my liquidity pools 24/7. Look at this. August 24th. When was the last time? August 17th. Week. Like once a week. How about my Solana liquidity pools? This is 5 weeks. Once every 5 weeks. Couple times a month, I'm doing this. Managing. I'm getting the best ROI on my time and energy. Stop fucking around. Stop trying to trade and time the market. Especially in crypto, it's very volatile. Difficult to make money. Pull your hair out and drive yourself insane. That's the video. Hopefully it helps. Get positioned. Stop fucking around. Plan out your ranges. Use concentrated liquidity. The best pricing to trade. You're not going to get a better pricing on a central exchange because you got to pay fees, remember? You're getting paid to trade on a DEX using concentrated liquidity. All right? So anyways, hopefully that helps. See you guys on the next one. Peace.